Well, hello, Fools. This is Robert Brokamp, the Senior Advisor for the Motley Fool's Early Retirement Service. And as part of our Ask a Fool series, we have received a question from Bridget. She asked, if stock websites are so good at investing, why do they need to charge people for information? They make more money by sharing information that will create more buyers for a held stock, so the price goes up. Seems like most sites that ask for money are scams. So first of all, Bridget, I think you're right to be skeptical of anyone who offers financial advice, whether it's a website, newsletter service, insurance salesperson, financial advisor, or even your brother-in-law. You got to make sure that they have a history of offering good advice and that they aren't offering any sort of self-serving advice, something that would enrich them more than it would enrich you. As for your question, I really can only speak for the Motley Fool, and I will tell you that we have, like any other business, have tried to create sort of a diversified source of income. Any website that doesn't charge for something basically relies on advertising, and as many websites found back in the dot-com bubble and bust, that relying just on advertising can be very problematic because it's sensitive to the economy, it can be very cyclical, so you try to have other revenue streams. Now, related to your other question about trying to, shall we say, pump up the price of a stock you hold, Motley Fool, I will tell you, exists to educate investors, help investors become better investors, and we're really not interested in increasing the stock price of any stocks that we hold. Of course, we hope they go up. We believe in businesses that we recommend through our services, but we share that information in hopes of helping you, not helping us. In fact, we have all kinds of policies that try to prevent our employees and our writers from benefiting from stock information or manipulating any sort of stock price. For example, our employees cannot buy or sell a stock within a certain window of when they write about a stock or when it is recommended by Motley Fool service, and that applies to spouses as well as the employee. So we have lots of rules in place because we think our reputation and our integrity is very important. But I will say, as I said earlier, you're right to be skeptical. I would say that the newsletter services and websites that are probably more prone or more likely to be manipulating stocks are those that discuss smaller companies, perhaps ones that are considered penny stocks, those who are worth just tens of millions or maybe hundreds of millions of dollars, because it is easier to manipulate those prices. It doesn't take as many investors to buy the stock to drive the price up, and then sometimes those people will sell it. It's known as pump and dump. I will tell you, of course, that the Motley Fool does recommend smaller companies at times, but it's not our focus. And I would say most of our stocks are in the mid-cap to large cap category. So thanks for the question, Bridget. It's a good question. If you have any other questions, visit us on Facebook or visit us at fool.com.